Well, good morning and welcome. You're watching Buy Now, Sell Now on ET Now. We have the Nifty, Vinny, at a fifth, up around a fifth of a percent or thereabouts. I'm Harsh Saita. With me is Vinny Motiwala. Quick introduction there. Over the next hour or so, of course, we're going to host the show, take you through all the queries that you have. But before that, Vinny, let's take stock of the markets.
Absolutely, and let's look at the markets. Last week, obviously, Nifty had fallen below that 19,300. Right now, also just slightly above that 19,300 levels. But yes, strongly recovered from the day's lowest point. When you look at the Nifty, yes, opened in the green, then fell into the red, and now the recovery that we've seen coming in. Let's look at what the broader markets are doing as well. Whereas the Nifty Midcap as well as the Nifty Small Cap. When you look at the Nifty Midcap in tandem with the benchmark indices, Nifty Small Cap that also is performing in tandem slightly better than when you look at it the benchmark indices as well as the mid-cap space as well. Bank holding on to decent gains are up almost 0.2% in trade, while what is not doing well today is the Nifty IT that is trading in the red and down almost 0.2% in trade. But Harsh, a lot of individual stock movers that are there in trade either on the back of news flows that we're seeing coming in, whether BHEL, BEML, all these names coming in on the back of some order wins there. So let's keep an eye out on that. But one stock surely that we're keeping on our radar today, Harsh, is Reliance and that AGM over there. And that's what everyone is keeping an eye out on, right, as well?
Well, yes, absolutely, Vinny. What can we expect from that AGM is really going to be in focus. We can see Reliance absolutely flat on the back of that. Did see a bit of a spike early on in trade on your screen there. But let's quickly take stock of what our editor, Nikunj Dalmia, believes of Reliance and what his views are with regard to what we can expect from that, from the commentary coming through from Reliance.
If you add back the Jio financials and the current price also of about 200 rupees, then also Reliance has not really been a great multi-bagger, so to speak. In fact, it has hardly participated in this bull run. So Reliance plus Jio financial, that will make it about, let's do the maths, 200 rupees plus, that's about 2,700. 2,700 also, considering where the markets are, I guess Reliance has been a marked underperformer. Yeah. Can the AGM really turn the tide for Reliance AGM? Now, specifically from the AGM, I don't think anything large should come out, Avan, simply because for all the major businesses, we've recently had one or the other update, whether it is Reliance Retail in terms of valuation benchmark, Jio Financials in terms of free share, and also the hydrogen new energy business, where the constant update has been coming. Historically, markets, the reason why they always look at Reliance AGM as something special, because this is one AGM where the family historically has used this as a forum to make big announcements. Jio was launched here, Patal Ganga expansion was announced here, the gas discovery was announced here, even for that matter, green hydrogen and the vision that Mr. Ambani wanted to make Reliance net debt-free couple of years ago was announced on one of the AGMs. But today, I think more than an announcement, I think it would be an update in terms of Jio financials. Markets expecting some clarity to emerge in terms of when and how Reliance Retail would be listed, because if you are looking, see, the valuation for Reliance Retail has gone from 50 billion to 100 billion. 100 billion is an enviable number for any company. Could there be some value unlocking? So I think it would be more on the lines of value unlocking going forward. It may not be about a new product line, a new product launch. It may be status quo in terms of a business update, but I think this AGM in a sense could be grand in terms of where the positioning is, because now the businesses have become so large that the only way forward for Reliance now to reward shareholders is that they will have to start unlocking the valuation.
Okay, that was managing editor Nikunj Dalmia's take on Reliance and what he sees Reliance AGM as. But, in terms of more details, in terms of segments, what is it that possibly could be announced? Let's go across to Somit to get in those details as well.
Well, investor expectations are largely muted ahead of the AGM, which is expected to be which will be held today at 2 p.m. But these are some announcements which still investors would want to hear more details coming in from the chairman, who will be speaking in the AGM today at 2 p.m. Now, firstly on value unlocking. Now, last year the chairman mentioned that they are aiming to double Reliance Industries value over the next 5 years. Now, to double the value of Reliance Industries, value unlocking will be very critical. Now, value unlocking could be in part of stake sale or a separate listing when it comes to two key arms of Reliance Industries, that is retail and telecom. Apart from this, also if you see, Reliance Industries has various other businesses, like they also own land assets in Haryana, around 8,250 acre of land assets. So any value unlocking related to other businesses of Reliance Industries would also be important to track. Apart from that, Jio Financial, which listed last week, saw continuous a lower circuit for 4 consecutive days, and on Friday it at least it did not hit a lower circuit. So what is the roadmap or the business plan going ahead would be important to track. Along with this, what is the official launch date for the services of Jio Financial would also be something important that the investors would be wanting to hear from the chairman himself. Now, when it comes to the new energy business, in their annual report, Reliance Industries did mention that they're willing to double their investment in this business. In 2020, they had committed close to 75,000 crore rupees of capex over the next 5 years. Now, if they're doubling their investment, how are they going to spend it is something that the street would want to know. And along with this, what is the timeline for the project commissioning and what is the kind of earnings potential that they're seeing from the various projects would be something important to track from our Reliance Industries AGM. Lastly, on the telecom business, when it comes, the street is expecting the launch of a new 5G smartphone. Now, earlier they had launched 5G smartphones in the affordable segment, but this time the street is expecting a couple of 5G smartphone launches when it comes to 10 to 15,000 bracket, which is a bit higher compared to the affordable segment. Now, this could also lead to a new leg of growth for the telecom business going forward. So, launch of 5G smartphone, investments in the new energy, value unlocking, and Jio Financial roadmap is something that the street would be wanting to hear from Reliance Industries AGM today.
Okay, Soumya, thank you so much for that. But let's bring on board our experts for today. We have Kunal Bothra joining with us, as well as Ashish Maheshwari. Ashish, Kunal, both of you all, very good morning to you all. And Kunal, I'm going to come to you. How are you viewing the charts now for Reliance? What are you seeing in terms of any indication that we could expect from Reliance? Yes, AGM is something that we important, and a lot of announcement coming in terms of that, updates coming in that. But charts, what's the indication?
Good morning, Vinny. Good morning, everyone. So my sense is that the stock has been absolutely sideways. Reliance is a stock which has now become more of an event trigger stock, because we've seen that the stock moves up generally higher or into any kind of a trend just prior to or post a certain event for itself. What we saw in the month of July, for example, specifically the first couple of weeks for the month of July, was the stock moving up higher by a margin of 10%, and post that the stock has gone through a sideways range for the last 1.5 odd month. July was the time period where the Jio Financial listing was or demerger was something to in discussion. So I think Reliance has now become more of an event trigger stock. Largely the stock is still into a range. 2400 is a huge support for the stock on the short-term basis, and I think even the last 1 or 2 weeks of this price correction for the markets as well as for the stock, it's been holding on to those levels. So till the time the stock is about the 2,400 mark, the view would be bullish on Reliance Industries, but it's just that the stock has now gone into a broad consolidation.
Right, Kunal. Ashish, if I can switch it to you, your views with regard to both Reliance as well as Jio, and what's at play here?
Yes, as far as this AGM is concerned, it's about just three things that market would like to hear from them. It's just value unlocking, unlocking, and unlocking. I don't think so. There's too much excitement about what capex they are going to do or what new launches are going to happen. Market like to see when a Geo platform is going to be get listed, because there are around 33 marquee investors are associated with this platform, and this is going to be a dream valuation whenever the IPO will come, along with Reliance Retail IPO, because the recent QIA investment happened almost at $100 billion valuation. So I think value unlocking is something that investors are more keen and excited to know. Other launches of this phone and tablets and all those things are, this is not something very significant in my view. So slightly I'm like having a neutral view on this AGM until some value unlocking timelines are announced.
Right. So Ashish, neutral on this one, and of course expecting some amount of commentary with regard to value unlocking that's going to hold the key as per Ashish. But we'll slip into a short break. More on the other side. Of course, we'll start taking your queries with both our guests and they'll start giving us good inputs. So stay tuned. More on the other side.
Welcome back, and you're watching Buy Now, Sell Now on ET. Now it's that time on the show when we get started and take all your stock related queries and start sending us your queries either on our WhatsApp number that is flashing on your screens or even on any of our digital pages on Twitter as well. So do get started. Today our experts are Kunal Bothra as well as Ashish Maheshwari. Let's get started with the first query then for today. And Ashish, the first one is coming your way. We have this query coming in from Reena Thomas from Kerala. They want to know if they can buy Texmaco Rail at the current market price for a long term, and the long term time period holding is around 3 years. What's your view on this one?
This is a stock which I'm recommending from level of 40-45, and I'm still bullish at 145 also, and still you can buy. Again, the triggers are the kind of orders which are coming in the transportation sector, and particularly railway transportation sector. Companies are not able to meet the demand only because the way railway traffic is moving up, the way things are shifting from road to rail and with better connectivity, companies like Texmaco Rail will really do well in coming time. So still, it's in my buy radar. Those who have bought at lower levels can continue to remain invested, and those who are willing to look at this price can buy it for 1 year perspective. Target will be 200.
Right. Let me switch over to Kunal. Kunal, if you can tell us, we have Rajesh Maheshwari from Indore. He wants to know about Divis Labs. He holds 60 shares at 4,555. What are your views? What should he do? Especially short to medium term is what he's really looking for in terms of advice.
So 4,555 means you've been invested into the stock at least over the last 1.5 odd year, because that was the rate for the stock in 2021 second half. Now, I believe that Divis Lab is one of the stock which has shown very good recovery in the last 5-6 months. I think Feb 2023 or just maybe closer to that is where the stock had formed a major low sub the 3,000 levels. From there, it's recovered back towards, I think, 3,800, 3,900, which is the high the stock had made recently. I believe now that this has set the tone for Divis Lab for the next at least 6 to 9 months for the stock on the upside. So don't expect a similar jump of 30% odd for the stock price in the next 6 odd months. But then I think gradually the stock should take or cross past about the 3,900 mark. So broadly 4,000, 4,200 could be a good price on the upside as a target. Now the best strategy which I would advise is to start averaging out at current levels so that you can bring your cost price down and get break even much quicker.
Ashish, the next one is from Bisakha from Kolkata, and he's a long-term investor. They're holding 800 shares of Yes Bank at a price of rupees 16 and 30 shares of Radico Khaitan at a price of 812. Should they continue to hold these stocks or maybe book out their profits and switch to something like a Tata investment or a Rolex rings?
Yes, in my view, Yes Bank you can exit because there's a stock going nowhere. If even like you see the banking stock rally, it hasn't really participated. And again, the culprit is the kind of huge equity base this bank is having. It will really take a lot of time and years to give you some very good returns with other banks. So instead of this, actually, I'll recommend from Yes Bank you shift to another bank, which will be Bank of Maharashtra. This is again a stock which has shown a lot of improvement in working. Stock has touched even 50-week high. Stock is getting a lot of momentum also. So this is a stock, in my view, can touch even 50 to 55 rupees in next 6 months. So you can sell this and buy Bank of Maharashtra. As far as Radico Khaitan is concerned, I'm quite bullish on this particular sector on breweries because the way consumption is going up, these leaders will continue to do well. So Radico is a hold in my view. Just have a patience for 6 months. You will get good returns even from it.
Right. Kunal, I'll actually stick to banks for you as well. Anu from Gurgaon wants to understand your views on RBL Bank. She currently holds 500 shares of RBL Bank at 228 rupees a piece. Your short-term views on RBL?
In fact, last week on the same show, Harsh had highlighted RBL Bank as one of the stocks which looks very attractive. The stock, I remember, was almost at 218 mark and given a target of closer to 240 from a very short-term play. So, would stick to that for RBL Bank. If you've bought at 228 odd levels, I would suggest, and from an extreme short-term point of view, if that's the time horizon you're looking out for, 240 could be a target which you can look out for RBL Bank.
Okay, let's move on and actually keep it with the banks as well. And then Ashish, we have the next query is from Subramanian from Chennai, and they are talking about Karnataka Bank. They are holding it at a price of 106 rupees per share. Medium-term outlook, what is it for Karnataka Bank? Should they continue to hold this or maybe switch to some other bank?
No, this is a quite good performer banking stock. There's no need to do hurry and shift. And in fact, this has given one of the highest return in this particular sector. If you see banking sector as a whole in the last 1 year, performance-wise also there's no such challenge in Karnataka Bank. Book value-wise also, like it's quite convincingly placed because book value is around 270 rupees. Stock is at 220.
Right.
So I remain invested.
Right. Thank you for that, Ashish. Let me move on. I'll stick with the banks though. We have Poonam who wants to understand, Kunal, your views or rather short-term views with regard to an Indian bank. She holds the shares at 340 bucks a piece. So definitely making a decent return as of now. But let's also try and get context. She wants to understand whether she should hold or sell. And the other one that she's also contemplating is Adani Wilmar. Your views on that, buy or...
So I'll start off with Indian Bank. I think it's a classical bank. It's a very good banking stock because the last 5 years of chart patterns for Indian Bank are just amazing because the stock had from I think 350 or 400 many years back had fallen to 2 digits in a very sharp manner, and from those 2 digits it's managed to resurrect itself and come back towards 400 plus levels where it's trading right now. So I have been very bullish on Indian Bank prior as well. When the stock was at 160 to 180 mark, and I would still believe that it's a good stock to hold on to it. Now, from a short-term play, the only catch with the stock is that it's high beta, it's high volatile. So you may see those gyrations of 10-15% in a very quick kind of a manner. But I'm very bullish on Indian Bank. I would suggest a hold. Adani Wilmar, I would not suggest a buy or even an average at current levels if you've already bought. I think the better stock to buy from the Adani stable would be either Adani Ports or Adani Enterprise if you're a high-risk trader.
Ashish, the next query is on HUL, and this one is coming in from Krish from Chennai, and they want to know, currently they're holding HUL 100 shares at 2,535 rupees, and they've been holding it for the last 2 years. Now, it's not been one of those movers, sharp movers in trade. So they want to know if they could sell part of it and maybe move to something like a Colgate in the FMCG pact. What's your view on this?
Yes, HUL is I'm very underperformer stock if you see last 1 year. Again, the rationale is the kind of competition they are facing now from peers like Tata Consumer or ITCs or Colgate. The sales volume growth is not happening. So this is one major cause of concern for HUL. So I suggest, in fact, instead of HUL, you can look at 2 stocks. So one is Godfrey Phillips. This is a stock which I like in again FMCG and particularly the great segment. And the part of FMCG pack, this can give good returns in next 1 year time. Along with you can surely make some position in Colgate also. So you can divide your exposure into.
Right. Kunal, if you can talk to us about 2 interesting names. One is Delta Corp and the other one is Lakshmi Organics. We have Ramki from Bangalore who wants to understand both of these stocks. He owns around 2,500 shares at 220 for Delta Corp and 1,000 shares at 400 for Lakshmi Organics. Your views from a short-term perspective?
Well, Delta Corp is not an interesting stock, Harsh. I think the stock has just been correcting very sharply. So I frankly believe that it's a stock which you should avoid even for trading, forget about long-term investing, because of the very high beta nature. So, stocks, they generally migrate or go into a strong uptrend which is sustainable. Once they change this behavior for themselves, that, being extremely volatile, that's still not happened for Delta Corp. The stock is still making fresh lows almost on a regular basis. So I would frankly avoid the stock and recommend to avoid. In fact, only once the stock stabilizes about to 40 odd mark, which is the previous resistance for the stock price, that's a better zone to buy the stock. Now for Lakshmi Organics, I think it's a sign of a turnaround of sorts for the stock. It's started to show some signs of recovery today. Major bottom formation process. So what's actually happened is that the stock went through a 8 or 9 month of consolidation at this level of 250, 260 odd, and today it's seeing some sort of recovery. So which means that the time-wise, price-wise corrections happened for Lakshmi Organics could be a very good buy at current levels if you're a medium-term investor as well.
Kunal, I'm going to come back to you because this query is coming in from Pratiksha from Muscat, and they're holding Reliance India for a very long period of time at a price of 315 is what they bought it at. They're currently making some bit of a loss is what they're highlighting. So, and what is the chart now indicating for this one, and what is the best price for them to actually start reducing some bit of their losses and the resistance level over here?
See, I think it's one of the few Tata group of stocks which had actually not performed in the last 2-3 years. I remember I think Reliance was almost at 360, had fallen down to sub 200 levels in this last 1.5 odd year. But then the good part is that on the very very short term charts, like over the last 4-5 weeks, we've seen volumes coming back for Reliance, the stock making a comeback from 200 levels to now 230 or sub 200 levels to 230 to 40 where it's trading right now. Bullish flag patterns on the charts. My sense is that in this leg of uptrend, the stock should at least come back towards 260 odd marks. So if your buy price is higher, you can look to average. 220 could be a better zone to average the stock price, and then look out for targets in the range of 260. That should broadly curtail your losses as well as ensure that you come back into decent profits over the very short term.
Right. Ashish, if I can come to you, we have Hamsa from Madurai who wants to understand views on Jubilant Foodworks. He's actually bought 180 shares at a price of 510 a piece. Should he add more? What's your advice at these levels?
Yes, Jubilant Foodworks, I think the worst is getting over now in this stock. And gradually from the lows, now stock is showing some consolidation and some upward movement also. Though it will be slow and steady because the way their ingredient prices are going up, it will be very difficult to pass on in that competitive market. But still, they are having market leadership in pizza and allied businesses. So I think as the market has started moving up and the way food stocks are going up, this will also start gradually recovering. So you can surely average or can add more at this price.
Right, and on that note, viewers, we're actually going to slip into a very short break, but don't go anywhere because we'll be back and we will be taking all your stock related queries even after the break.
Right, welcome back. You're watching Buy Now, Sell Now on ET. Now we'll continue taking queries and let me switch it to Ashish. Ashish, I have a very interesting one. Matthew from Muscat wants to know whether it's a good time to go contra and buy some of these beaten down chemical names, the likes of a Deepak Nitrite, SRF, alkylamines is something that he's really looking at. And within this basket, if it is a good contra play, what would be the best way to play it?
Yes, in fact, this will be a good idea in long run to look at now these chemical plays because I think for last 1 year they haven't participated in any rally number one. Again, we have seen the way textile stocks and allied stocks have started moving up. Again, the demand is going to come up in this particular space also. Only problem was that as China was slowing down and the export to US and European markets are not that forthcoming. So a lot of pressure was there on domestic prices. But now, as these companies have done their all expansion plan, most of these companies are debt free. So I think this will be a good time to gradually accumulate this stock. So maybe Deepak Nitrite being one of the largest player of nitric acid in India can be a good play along with Tattva Chintan Pharma will be another stock which I like in this space. And Lakshmi Organics maybe that's bet number 3 in this.
Kunal, the next query is from Thomas and from Kerala, and they want to invest 1 lakh rupees for the next 6 months. They want 2 stock names that they could look to invest in this amount.
Yeah, tough one, but I think Federal Bank is something which has popped up on the charts, looks attractive at 140 broadly where the stock is trading right now. So I think from the recent chart perspective, would look out for say a 6-month target of 155 to 165 for as a range for Federal Bank. That's one stock which you can look out for. I have been bullish on RBL Bank, and I think 240 is the target which I had mentioned earlier for the stock price. So would maintain that for RBL Bank. And in case if you're looking out for say a high beta name, I would recommend Anantraj Industries at maybe closer to 200, 205. That could be a better price to buy the stock for a potential 6-month target of at least 235 to 240 for the stock price.
Right. Ashish, we have Bhardwaj from Coimbatore. He owns 750 shares in Tata Steel at an average price of 107. He's a long-term investor, wants to hold this for the next 2 to 3 years. Is this a good time to buy more, accumulate more at the current market price?
See, metal stocks, I'm not that bullish. In my view, this is a sector which will continue to feel pressure till the time China market revives. So China has reduced interest rates and they are trying to revive the economy, but things are still not looking that great. So this is the reason these stocks are subdued. But if you are having 3-year time frame, then certainly this sector can be a good bet. But here, instead of Tata Steel, I'll prefer more mid-cap stocks which can give better returns. So I like more NMDC Steel at 54, 55 rupees, along with Welspun Corp, which is again a proxy play to the metal prices because they make pipes out of metal. So these two can be a better bet.
This query is coming from Vishal from Dubai, and they are a long-term investor. Medium to long-term is what they want your view on in terms of VA Tech, Vabag, as well as Sterling and Wilson. Should they buy it right now if they're looking for a medium to long-term, or maybe wait for some bit of a correction on the charts? What's the indication?
So I think good levels to buy both these stocks, Sterling and Wilson as well as Vabag. I think both these stocks have gone through their individual phases of correction very recently. I think Vatek Vabag corrected from 535, 540 to now 470, which means a decent 10% correction. And even for Sterling Wilson, the stock has already corrected from 400 to 360, which was the recent correction. So a good 10% correction is shaped up. I think it's a good time to buy these stocks.
Right. Ashish, Prathamesh wants to understand your views on the auto anch sector. Any good plays over there? What's your suggestion?
Auto ancillary, right?
Yes, please.
Yes, so auto ancillary will be again a good sector to watch, and here companies have really rewarded investor very handsomely in last 1 year. So a couple of stocks I like here most is first is Ramakrishna Forging. This is again a global company where maximum of their forging products are exported, and I'm expecting very good set of numbers at least for next couple of years from Ramakrishna Forging. Along with one stock which I like, and again in tire space, is JK Tire. I think the run-up which we have seen in tire stocks will take again these stocks to new highs in coming year. So JK Tire looks very promising even at this price point.
Kunal, Balan wants your view in terms of care rating as well as Rainbow Children. They're making a 15+% profit on both of this as of now. Should they continue to hold this or sell, or maybe look to something like an averaging even at the current price?
Well, Rainbow is something I don't track because the recently listed and the restricted price history, so I'll skip that. Care rating, I think, is something which you can hold on to it because the stock has just given a breakout of a 3 or a 4 year of consolidation. So it was going through a major downtrend, corrected by I think more than 30% or rather more than 50% in I think the prior 5 years of the correction from 2015 highs odd for care rating. So it's making a good comeback. The stock has broken past about the previous 3 year, 4 year swing high. I think this could be a good positive sign for the stock over the medium to long term. I would suggest a hold.
Right, Kunal, I'll stick with you. We have Anjali from Nashik who wants to ask you this question specifically. Your views on UPL, is it a good buy at this price?
Well, I doubt so because I think the stock has just been consistently falling. This is, if I'm not wrong, there was a streak of 8 or 9 consecutive weeks of sell-off for UPL. The stock in this last, very recently, 8, 9, 10 weeks of correction, the stock had fallen from 700 to 585. The concern for the stock is that it's trading below the major moving averages, the 200-day moving average, the 50-day moving average. Ideally, for the stock to get into a recovery, we need to see some signs of recovery of or confidence that the stock is breaking past above their key moving averages every now and then. But I think till the time we don't see those signs for UPL, I would avoid the stock or recommend and avoid. Maybe if the stock breaks past about 620, 640 mark, that could be the first trigger of positive momentum coming back for UPL. So I'd suggest wait out for that.
Ashish, we have KB Rao from Hyderabad who wants to know if they can invest in NCC at the current price for the long term.
Yes, I think infra stocks have started moving upwards, and even NCC was also quite a good performer. And if you've seen last 1 year, so fundamentally nothing adverse in this company now, and we'll see more upside movement in this stock in next 1 year. So, but only thing is, infra stock takes some time to move, but slow and steady it will give you good return. So stay invested here, and even those investors who are looking for some quality infra stock, NCC can be a good bet in the portfolio.
Right. Kunal, Mathi from Tichy has purchased 200 shares of Coal India at 230 apiece and has been holding it for over the last 1 year now. Has a bandwidth to hold for around 6 months or so more. What's your view on this? What should they do?
See, I think Coal India has become more like a dividend stock. The stock has been absolutely sideways. Don't see any trend emerging on Coal India on the charts specifically. So purely from a technical standpoint, I don't think that it may be one of the best PSUs purely on the charts. There are better names in terms of the trading, which I would probably suggest from the PSU pack. We've been recommending RSC, PFC as better buys at every move on the upside. BHEL is something which you can consider to buy at current levels. BEL has been a very good stock. So I would suggest to go for that alternative, even if you're a medium to long-term investor and have a slightly moderate kind of a risk appetite.
Ashish, coming from the next query is on Weber Global as well as PNC Infra. Now we have Satya who is holding Weber Global at a price of 320 rupees per share as well as PNC Infra at a price of 330 rupees per share. What should they do? Should they look to add more?
I think you can remain invested. Don't add more assets. Though stocks have fundamentally good stock, but in my view, these stocks have moved quite fast in a very short span of time. So don't add new, but remain invested here because performance-wise, I'm not expecting any downfall, etc. But as in the mid-cap rally, such names have moved really fast. So just remain invested and book gains in maybe next round of some more rally.
Kunal, Indu owns Linde India and in fact owns it with a very healthy gain of 40%. What's your sense with regard to the upside left on this one? Should she continue to own it? What kind of returns should one expect? What target prices should one look at?
It's a brilliant move for the stock in the last 6 odd months. I think March or April lows for the stock was around 3,200, I think if I'm not wrong, or 3,250 approximately. And from there, the stock has given returns of doubling from those levels to 6,000, 6,100, where it's trading right now. So, from a short-term angle, because the indicators are overbought, I would suggest to book out profits. But from a long-term angle, that these are the kind of charts which actually go into multi-year of uptrend. So, it depends on how much you can tweak your time horizon to. If you want to restrict it to short-term, then I think at current levels, you can book out profits. But if you have that risk appetite and since you have a lot of buffer in terms of profit, ideally, you should hold on to it from long-term.
Dr. Wadiwala from Pune, Ashish, wants to know if they can enter for a long term and start buying Asian Paints and Avenue Supermart. Is it a good time to enter this?
Yes, in fact, both these stocks will be good in long run. Again, paint stocks, Asian Paints is again leader, and we have seen the worst is over in this stock as such. So, going forward also as the crude prices are low and the way housing demand is again picking up, and the kind of projects being taken by government sector, I think this will continue to do well. Though stock is under some consolidation for some time, but long run, you can remain invested. As far as Avenue Supermarket is concerned, again, the front runner of retail revolution in India. And here also a lot of consolidation happened. But gradually you will see this stock maybe in 1 year time will be back to 5,000 rupees.
Right, Kunal, we have K. Parthasarathi, who's a senior citizen from Chennai. He owns around 75 odd shares of SBI cards at around 810 apiece. Wants to understand two things. One is whether he should buy, sell, hold at the moment. And second is, what are your target prices? What are the kind of numbers that he should look out for? He's been a long-term holder of this stock, if I'm not wrong.
Well, but from the short-term view, the charts are not a bit more exciting for SBI cards. Now, what's actually happened is that purely on the technical basis, it's formed a inverted cup and handle pattern, which is typically not a good sign for the stock price. The last time we had seen such a pattern for SBI cards was, I think, in 2022 Jan-Feb, or post that. Where the stock formed a inverted cup and handle pattern, and from 780, it had fallen down to, I think, as much as 660 mark in the next 6 odd months for SBI cards. So I'm not sure whether the same trend could repeat for itself, but there seems to be a definite amount of weakness into the stock price. So I think it's better to try and exit the stock and revisit maybe at lower levels.
Okay, on that note, viewers, we are going to sip into a very short break. Don't go anywhere. We'll be continuing with all your stock-related queries after the break. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries. Ashish, the next one is from Neeraj Srivastav and they actually have Info Edge at a price of 4,600 rupees per share. 90 shares is what they're holding. What should they do with this right now? Maybe they should look to sell Info Edge or continue to hold it?
I think continue to remain invested there. Again, this is a stock which has given good return. Some consolidation is happening, but fundamentally, nothing wrong with the company. And looking at the kind of corporate announcement, etc., we may expect going forward because a lot of investments, what they are having in their book, gradually their value unlocking will take place. So this kind of start performing. So my suggestion will be to remain.
Right. Kunal, we have Murli from Bangalore who owns Adani stocks. He's not really suggested which ones he owns, but wants to understand your view on the larger Adani counters. Let me make this simpler. Maybe two stocks which you feel one should have in on one's radar in terms of buy at the moment within Adani names, and two ones that one should avoid.
Well, of course, from the ones which you can look to buy, I would recommend Adani Ports as well as Adani Enterprise. Adani Enterprise specifically if you have a high risk appetite, but then I think if you have a slightly moderate risk appetite, then I would still believe that Ambuja Cements or ACC, I think they are very good buys even at current levels and specifically from a portfolio view. Now, the two names which purely on the charts have been very, very volatile. One of them is Adani Wilmar. We discussed the stock earlier, and my sense is that the stock has gone through a huge breakdown as such on the charts. And Adani Transmission Gas, I think if I'm not wrong, the stock is almost at 650 levels. And the year high or the start of this year, the stock was almost at 4,000, which means it's not been able to recuperate or recover from that major sell-off the stock has shown. So these are the two names which I would suggest as an avoid.
Kunal, I'm going to come to you again actually. This query is from Gopinath R and from Mysore, and this one is on Kaynes Technology. They just want to know how is it looking at the current market price? Should they look to enter the stock?
Well, not at current levels, but it should be a part of your broader portfolio. So Kaynes is a stock which tends to go into that odd consolidation every now and then. My sense is that the indicators right now are a bit overheated for Kaynes on the short-term charts, which means that the stock should ideally come back towards 1800 to 1900 mark, which could be a decent 5%, 7% correction for Kaynes over the very short term. Try and take advantage of the stock in that phase of a correction.
Right. Ashish, let me move to you. Pradeep from Kolkata, senior citizen, wishes to understand your long-term view on Kajaria Ceramics. He's bought it at 1170 a share. What's in store for this one in your view?
Yes, again, as far as Kajaria Ceramics is concerned, stock has really given very good returns to investors and almost 50 rupees away from 52-week high. And this will continue to do well. If you see at 22,000 crore market cap company, you are getting a leader into ceramic space. which is quite promising. As far as even if we see their numbers, etc., also consistently they are making 100 crore plus kind of profit every quarter, and company is virtually debt-free company. So Kajaria Ceramics is a hold in my view, and these kind of stocks are being traditionally chased by foreign institutional investors also. So remain there. I'm expecting in next couple of years a stock may even see 2000 plus mark.
Kunal, Ramamurthy from Bahrain wants to know if it's the right time and to actually start investing in e-mudra.
Well, e-mudra is something which has done exceptionally well. I think in the last 5 months, from 225, the stock has gone up to 500 plus, which means a return of more than 100% for the stock price. I think it's a good stock to own, but maybe you can start buying at in tranches. So you can start at current levels of 500. The next tranche is where you can look to buy at 450, 445, which was the previous month support for e-mudra. And then the third tranche may be closer to 400 levels. So these are the three staggered steps which you can look to buy.
Right, it's that time of the show when we really start ramping it up. Let's start our rapid fire round. So let me start off with Kunal. Kunal, if you can tell us your view on Geo Finance. We have a viewer, 100 shares at 250, should average or should he average at the current price?
Well, I'm not sure because the chart history is very limited, so I'll skip this.
Okay. Ashish, Unipath's Giriraj is holding 1000 shares at 619. What should they do? Hold or maybe book their losses now?
Instead of this, you better buy Jamna Auto, which can give you better returns.
Kunal, your view on Dixon Tech?
Extremely bullish on the stock. If you bought at lower levels, you should definitely look to hold on.
Ashish, we want to know, or the viewer wants to know, Ganesh wants to know on PTC, is it a good time to enter the stock?
Yes, PTC will be a good buy. I'm bullish on this particular sector, so PTC is a buy.
Right, Kunal, your views on M&M. We have Yuvraj who wants your view on that one.
Bullish on the stock. If you're holding long positions, continue to do that.
Kunal, Vidya from Chennai, short-term trader, wants to know if it's a good time to start entering Blue Star.
Well, Blue Star has been a stock which has gone through a correction in the last few weeks. I think at 720 mark where the stock is trading could be a good buy.
Right, Ashish, talk to us about Garden Reach, your views. Of course, the entire defense pack is buzzing, but within that, what's your view on Garden Reach? We have a viewer who has 300 shares at 830 apiece.
I'm bullish on Garden Reach, Cochin and Madgaon, all three stocks. I think Garden Reach, if you ask me, will be one of the best picks here.
Kunal, we have Gauri Gupta who's holding Paytm at 670 rupees. Should they sell and maybe buy something like an HDFC Bank for a period of 3 to 6 months?
Yeah, that could be a good strategy.
Right, Ashish, talk to us about your views on USL, bought at 900 rupees a piece. We have Thomas George from Kochi, has 500 shares. What's your view on that one?
This slightly underperformer stock come in this entire space. So I'll advise you exit from this, and instead of this, either you buy Som Distilleries or Associated Alcohol, which can give you better return than United Distilleries.
Okay, and that was the last stock that we were taking for today in terms of your queries. But we will be taking more queries tomorrow as well. So thank you so much, Kunal, as well as Ashish, for joining in with us today on Buy Now, Sell Now. And with that, viewers, we're absolutely out of time on this edition of Buy Now, Sell Now. It's a goodbye from Harsh, myself, as well as the team who put this show together. Don't go anywhere. Markets and news will take the action forward.